Here now call the meeting to order. Ask the clerk to call the roll.
Mayor Williams.
Here.
Mayor Pro Tem Marshburn.
I'm present.
Councilmember Behringer. Councilmember Vance. Councilmember Kennedy.
Here.
Councilmember Singleton.
Here.
I've asked Gray Singleton to deliver the invocation. Gray.
I'd like to join me, please, so I pray. Father, we thank you for this day and for allowing us to come together tonight to discuss issues important to our town. Be with this council and the staff and those who talk and present information here with us today. Father, we lift up in special prayer those who have suffered from severe storm damage across this country, those who have lost their lives, those who are injured, those who are missing. I ask that you be with these people and their family, be with the rescue and EMS and fire and police persons as they try to assess the damage from these dangerous storms. Father, we always want to lift up our military personnel, men and women who are stationed across this world, representing and protecting the rights of this country and the countries in which they serve. It's in your son's name we pray. Amen.
Thank you, Gray. Adoption of the agenda.
Mayor, I move adoption of the agenda as it has been presented in our packet.
Motion, is there a second?
Second.
All in favor, vote by saying aye.
Aye.
All opposed? Next is reports and discussion. Craig Robinson. Welcome again, sir.
Thank you. Thank you all for being here. Mayor Williams, I appreciate you all's time, and council and staff appreciate your time today. Just coming to bear the news about the markets in the town's portfolio. I'll have some bad news on market and economy information. Not terrible news, but some bad news. But the portfolio is doing well, so I have good news there. So that's what you really care about, is what's going on with the portfolio. So I'll definitely share some good news there. You all have the presentation in front of you, but I'll also pull it up on the projector here. As I said, I'll give an economic update, and then I'll go into the portfolio. So, the world. I'm sure you all have been paying attention to the news and all the things that have been happening in the world, but there is a great deal of geopolitical risks that persist around the globe. I'll highlight just a few of those. Particularly what's really been in news is the trade war between the U.S. and China. As you heard, that the U.S. added an additional 25% onto about $200 billion of tariffs on China. So that has definitely spooked the market somewhat, where the market was thinking it was a skirmish, and now the market is feeling that this is an all-on war. So you're starting to see that in some of the data that's coming out about the economy. In addition, Brexit. Prime Minister May resigned, so she'll be resigning in June. So that kind of leaves Great Britain's exit from the European Union up in the air. So there's a lot of things that are uncertainty around that could impact, or is starting to impact the markets. You have the U.S. and Iran military escalation. Over the weekend, I think President Trump scaled back some of his strong rhetoric with regard to Iran, but that's still out there, and that causes some additional uncertainty in the markets. So those are probably the three biggest highlights that I wanted to point out as it relates to geopolitical uncertainty that's impacting the markets. Any questions around that, or anything you all have been hearing, just learning about from an impact perspective to the markets?
Question?
Probably don't need to have
enough to ask.
Yeah. I was going to say, probably don't need to have a political discussion at this point, but I would think in this hemisphere, the Venezuela problem is a pretty significant issue as well, but that's just a general comment, so.
Sure.
You're more, what did you say? You didn't have the, what did you say?
I wouldn't have the intelligence to ask.
I think you got a lot more than what some of the stuff I see on TV. You have far more intelligence than some of the verbal discussions I see on TV amongst all the channels.
I'm surprised that, well, on the positive side, what about the potential trade agreements and or the reductions in the tariffs between the U.S. and Mexico, and or the potential for that?
Right. There is a potential for that, and that would be a positive on the markets. But the trade between the U.S. and China still dwarfs what's happening between Canada and Mexico. So that's still kind of the biggest concern. But if something was to happen there, that new trade agreement gets signed, that would definitely give a pop to the market for sure. But the U.S. and China, from a trade perspective, is the biggest issue. And just going to Venezuela, Venezuela is a big oil supplier, so that impacts oil prices, which, things, if you think about the American consumer, 3 things that the American consumer really cares about: recessions for one, oil, because we all, over the weekend, we probably all got in our cars and traveled somewhere, either over a long distance or short distance, and also we all got in airplanes. They got an airplane to get here. That impacts, prices from an oil perspective, and then wages and employment. So those are the big things that, that adds to consumer confidence, and that's something that is a big indice that we all have to pay attention to in terms of what's going to happen with the market. So the consumer makes up about 70% of GDP, consumer expenditures. So when folks get hit in the pocket like all of us, we're going to pay attention, and that can cause some issues in the markets.
Anyone else? Okey-doke.
Okay. So current economic conditions. If you look at this slide, things are going pretty well. We had a good first quarter GDP. So this first bar chart at the top here, we had about 3.2% GDP growth in the first quarter. That was the highest since 2015, first quarter highest since 2015. But the forecast for the remainder of the year and into 2020, we're looking at lower GDP growth. I think I've seen, as of today, some numbers. I think we were looking at a second quarter GDP growth of about 2.5, 2.2%, but that's been revised down by some economists down to 1%. So I think a lot of the trade and some of the data that's been coming out, economic data that's been coming out in the last couple of weeks have spooked the market somewhat in economists. So there's some concerns about GDP growth for the rest of the year and into 2020. Unemployment, all-time low. A 50-year low at 3.6%. That's great. That adds to consumer confidence, and folks feel confident that they're going to have their jobs and they're able to, go be employed and supply their family and be, provide income for their family. So that's a good thing. In April, 263,000 jobs were added. That's pretty strong. And for the year, it's about an average of about 209,000 jobs. So we're adding jobs to the economy, which also will help boost the economy and also help boost consumer confidence, which is also at a high. It's not as high as in the last year or in the last 5 years or so, but it's still, if you see, it spiked down somewhat in February, March, but is on its way back up in April. It's yet to be seen what will happen, but consumer confidence, when unemployment is low, wage growth is up, strong GDP, consumers are confident in what's happening in the economy. Inflation. So let me take a step back. When we think about the town's portfolio, and we're in a 1 year and less strategy, meaning securities in the portfolio mature in 1 year or less. So we focus on these economic indices, particularly GDP, unemployment, inflation, and Fed funds rate. So typically in all my presentations to you all, I always talk about GDP, unemployment, inflation, and the Fed, because that definitely impacts short-term interest rates. So inflation, core PCE is the Fed's target for inflation. They want to have a 2% inflation target, and that helps predict whether they're going to raise or lower interest rates. So right now we're at about 1.6%, which is below their target. Some folks are saying, not necessarily the Fed, but there's some concerns about are we in a deflationary environment? I don't think we're there yet. But as you can see, this quote by Chairman Powell, core inflation expectedly fell and as of March stood at 1.6%. We suspect that some transitory factors may be at work. So short-term factors may be impacting inflation, where we see inflation going back down. This is that orange line where you can see it going down here at the end of March at that 1.6%. But I think it's some temporary things. That's what the Fed at least thinks from the data that they have. But it's something that we're definitely going to pay attention to and see how the Fed reacts. I think I came last year and we were in an the Fed was raising rates when I came last year, but now they paused. And in December, there was the Powell pivot where they said they wouldn't increase. At the end of December, the Fed was going to say that they were going to raise interest rates 3 times in 2019. The market reacted negatively. You saw the S&P fall tremendously. You saw bond yields fall. and it was just chaos in the markets, for lack of a better term. The Fed came out and said, no, we don't think we'll have any more rate hikes in 2019. We're just going to remain not raising rates and just pay attention to the data and make decisions based on the data that we see. So with that pivot, that basically gave a little bit more confidence to the market, took the Fed out of the equation in terms of impacting interest rates, and you see the market rebounded since then. I have a slide on it later on in the deck that I'll show you where the S&P sunk at the end of the fourth quarter and then rebounded almost 20%, between 20 and 24% in the first quarter of 2019. So as I talked about, the Fed indicated no rate hikes in 2019. So this is the Fed dot plot, and this is something that they produce after not every meeting, but every other meeting. They produce this dot plot. And the dots represent all the Fed presidents who are decision makers in terms of the Fed funds rate. The median line, this blue line, represents that the median or projected rates increases that the Fed presidents would like to see. And then Fed fund futures represents the market, which is the green line. So this is an older chart. This is from, excuse me, it's not that old. It's from April, but the Fed expects no hikes in 2019. The market expects a rate cut this year. So for a while, since the Fed started raising rates in 2015, you saw the market and the Fed kind of going on the same path of expectations in terms of rate hikes. Now you see this divergence. And as you can see, as we go out a little bit more in 2019, 2020, that divergence or that spread is becoming even greater, where the Fed thinks where interest rates should be, but the market thinks the interest rates will be lower, and they're actually pricing in a cut. As of April 30th, it was 67%. As of today or yesterday, it was 81%, or as of today, rather. 81% expectation. The market thinks that there'll be a cut, a quarter point cut in December of this year. So you can see the divergence is happening. The market has these expectations that we may see a cut. That means that we're in a slowing, the economy is starting to slow, and there's some concerns about what's happening in the markets or in the overall economy from a global and a domestic perspective. Take a pause there. I know I said a lot just to see if there's any questions.
Questions?
Moving on to the next slide, this is just piggybacking on what I just said and what the market expects from a rate cut. We potentially will see a quarter point rate cut in 2019. December is the expectation of when that cut will happen. The Fed fund futures market changes on a daily basis. Like you saw, it was 67% at the end of April. Today it was 81. Tomorrow it could be something totally different. So it's just something that we continue to monitor, to see what the market is thinking in terms of where the Fed will be in terms of rate hikes and cuts.
So Fed is controlling the interest rates. The market says we want the rates to cut or to reduce. At a point in time, maybe that doesn't upset everybody, but if that is sustained over a year or so, I'll just use a year, how would the market react versus how would interest rates react if the Fed's not budging? What does it do to our investment versus what does it do to the market in general? If they continue on this separate path.
Kind of divergence, yeah. Yeah, that will definitely impact interest rates for sure. Short-term interest rates will definitely be impacted. You continue to see a divergence, and folks will be thinking about where to place their money. Right now, if you think about it, the U.S. is still the best economy in the world. The U.S. Treasury is still, the most risk-free asset that's out there. And if you look at other countries such as Germany and Japan, their actual short-term interest rates, or you take the benchmark, the 10-year bond or the 10-year Japanese debt is negative. There's negative interest rates in Germany and Japan. Their bonds are yielding negative. So basically, to invest your money in a German bond, you're paying them instead of them paying you an interest rate. So where is the rest of the globe going to put their money? They're going to put it in the U.S. Would you Would you put your money in some paper that's yielding 2.25, or would you put your money in something that's negative? You put it in something that's yielding 2.25 as opposed to something negative. So there's nowhere else to go but the U.S., and that's kind of the safe haven. And you saw a little turmoil in the markets today, actually, where folks started to put their money into, take the risk off, as they would say, from equities and other riskier assets and into treasuries. So that's still out there, and as things continue to move along in terms of uncertainty around trade and things of that nature, and with the Fed's kind of staying pat right now, but the next meeting we'll see what they have to say about where they think data is or where the economy is and what decisions they'll make. They'll start hinting about some decisions that they will make in the future, and the market will kind of digest it and react to it. They won't meet in December and say we're going to make a cut without kind of hitting towards making a cut in December. I talked about the short-term relationship between the two Fed funds. Oh, I have not actually. So this is an interesting chart to show you all. Short-term yield relationship has realigned. You can see in July of 2018, or even going back to April of 2018, you had a significant spread between the Fed funds rate, this yellow line, 3-month commercial paper. The town does invest in commercial paper, in the 2-year Treasury note. It was a big spread between the two securities and also the Fed funds futures rate, but that has started to come in line, and the market likes to see, some consistency in those benchmark yields, essentially, for lack of a better term. So they're kind of in line, although the 2-year is less than the Fed funds rate, but CP is still higher, as it should be. Credit should be higher. It's a more riskier asset class than a Treasury security, and also Fed funds. So something to watch is how this 2-year Treasury will rebound based on Fed funds, and that also tells you about short-term interest rates, and I'll get into that, where we have a version between the 3-month Treasury and the 10-year Treasury, which just recently occurred. But to have some consistency in those three rates kind of gives some stability to the market.
Was there anything in particular that happened, end of 18 or first of 19, where the commercial paper 3-month and the 2-year Treasury seemed to go in opposite directions all of a sudden there?
Yeah, that came from where the Fed came out and said that they were going to hike 3 times, and the market reacted negatively to that, saying, oh, no, you don't need to. The data doesn't support you raising rates 3 times in 2019. So that's where that came from, where the spread shot up.
Okay.
And probably the next time I come here and I talk about the second quarter, you'll probably see CP spreads higher. You'll start to see that spread between the 2-year Treasury and CP start to go this way. I'll have a slide coming up that talks a little bit more about that. So the yield curve. The U.S. Treasury yield curve remains partially inverted on the short end. So if you look at this second column where it says 4/30 or April 30th, you look at the 3-month, you look at the 3-month Treasury, it's at 2.41%. And then you look at the 10-year, which is the second from the bottom. Second from the bottom. You see there's a 9 basis point difference as of today. That's actually inverted. Now the 3-month Treasury is actually higher than the 10-year Treasury, which is called an inversion. And this happened slightly in March. So this signals a potential recession, but the inversion has to remain for over a few months, so 2 to 3 months. If that remains, then that's a strong signal that a recession could be happening in the next year or so.
Mind repeating that?
Sure.
So, and go a little bit slower, hit the points that compare the curve to the chart so that we understand it, you understand it, but we'll catch up.
Yeah, no problem. So you have the 3-month Treasury, which is this top line here. It's at 2.41%. So 3-month Treasury is a short, the short end of the curve. Then you have the 10-year, which is the second from the bottom. You see that 2.5%? 9 basis points difference, so the 10-year was higher than the 3-month, which is what should happen. It's actually a tight spread. So that means that's what you call almost a flat yield curve, where the long end and the medium end is almost the same. Typically, you like to see the short end here and the longer end, and then the curve go this way, right? Upwardly sloping yield curve. Now you have a flattening yield curve. And now, as of today, the 3-month is here and the 10-month is here. So the 3-month, I didn't write down what the yields were as of today, but the 3-month is at about 2.36%, and the 10-year is about 2.26%. So we were here at the end of April, and as of today, May 28th, between the 3-month and the 10-year, we're here. So now we have a downward sloping yield curve. So that's signaling that something's going on in the markets.
So today, you'd say the 3-month is 2.36, and
Yes. And the 10-year is about 2.26. That was the last time I looked at it before I got on the flight to come here, so I don't know where it closed right now, but I can get you the specifics in a minute. But it's a spread. It's a pretty significant spread. We haven't seen that kind of a spread between the 3-month and the 10-year since 2007, is what I heard quoted this morning. So that inversion causes concern and is something that we're going to look out for and pay attention to as we manage the town's portfolio. Short-term credit. So this kind of goes back to the question that you asked about the spread between credit securities and treasuries. So this chart is representing the 6-month commercial paper over a T-bill, 6-month T-bill. So the high around December 2018, the spread, meaning commercial paper, was 46 basis points higher, or 46 basis points higher than a 3-month T-bill. So the CP yields were more attractive than a treasury yield. But as you can see, it's come down. At the end of February, it's about a 9-point difference spread, and now it's back up to 14 basis points. And we'll probably see this number in May, June, start to spike back up. To where, I don't know, but just given all the uncertainty and all the issues that's going on, geopolitical issues that are going on, but still a strong U.S. market as of right now. But the slowdown, we'll start to see that spread start to widen, and they'll be higher. Probably the next time I come talk to you, I'll try to bring this slide back up and do a comparison of where yields will go in terms of the spread between the 6-month commercial paper and T-bill. So you all have about a 9.5% allocation to CP. So as we see CP yields get more attractive over treasuries, we'll probably add more CP to the town's portfolio to try to capture additional yield.
so less than 10% in commercial paper?
That's correct.
Rest of it is essentially in treasuries?
That's correct. And I'll just jump to it right now so you can see. So here's where the town's portfolio was as of April 30th, 2019. We were all in treasuries, about 91% was in treasuries and about 10% in commercial paper of the town's portfolio. So this is just the investment policy compliance. It's just letting you know that we're doing our job and making sure that we're in compliance with the town's investment policy and also general statutes. I always like to show this to give you comfort that, we're not doing anything that's not approved. So we have a sector limitation of 15% commercial paper, so we can go up slightly more. We probably won't go any more higher than 11 to 12% in commercial paper as yields start to widen. But, so the next time I talk to you, that might be a little bit higher, and treasuries might be lower. I'll just wrap up this section of the presentation and just give you our outlook. This is as of May 2019. Tomorrow, our investment committee is meeting, so these views will change, and I'll have more data as I talk to you in the coming months. But our view is we're neutral on commercial paper, we're neutral on T-bills and T-notes. Agencies, callables, we're actually favorable, slightly positive on, but given where callables are, where we really like callables to have a lockup period of 1 year or more, meaning that the bond cannot be called based on where interest rates are 1 year or more, but the town's portfolio has securities that mature 1 year and less, so it's not really applicable to buy callables for the town's portfolio. We're not high on bullets. Typically, when we had agency securities in the town's portfolio, they were bullets, meaning that there was no call. It just matures at a certain point in it, down in the future. So right now, you'll continue to see T-bills and commercial paper in the town's portfolio going forward.
Very good. Anybody got any more comments?
Now the part you really care about. How much money did we make? Did you make us any money, Craig, given all
Yeah.
the stuff that's going on? So if you look at this first column or the second column, this is the benchmark. So this is the Bank of America Merrill Lynch 1-year Treasury Index. This is how you measure how we perform as an investment advisor. So this is trailing 12 months. So this goes back to June 2018 to March 31st, 2019. So the yield for the index was about 2.42%. So if you invested in the BAML 1-year Treasury Index, you would have made about $239,000 in total return. That means gains and also coupon payments on the securities that are held. The town's portfolio, which we actually manage, earned about 2.46%. So about 4 basis points or 5 basis points if you probably add in some additional points. So we beat the benchmark by about 5 basis points. So the town earned as a total return, meaning market value gains, coupon payments of about $244,000 over a 1-year period.
Obviously, December through March was a
Yeah.
much better increase than the previous months.
That's correct. December, as I said, there was a lot of market turmoil, and that impacted performance on the portfolio for the fourth quarter. But we rebounded nicely in the first quarter, which we're pleased about, and I think we're doing fine for the second quarter. I haven't seen the preliminary numbers just yet, but just given all the rest of the model portfolios that we have, they seem to be performing well against the benchmark. So I think we'll be okay for the second quarter.
Craig, how long has your company been managing our investment? 3 years?
I think about 3 years. I think it was 2016. It was the fall of 2015. Do you mind if I borrow? Thank you. Yeah, we don't have, it was about, fall of 2015 if I'm looking at the quarterly performance report.
Almost 4 years, and before that, Pam, we were earning a grand sum of 0.05 to 0.06%. How much?
0.01.
Oh,
1 basis point.
1 basis point. So we're at 146 basis points. Pretty much of an increase.
Pretty, not too bad. I mean,
Really, the point to be made is that it's not that far back that we were essentially earning zero on, there was no money to be made on just typical, like what we're used to with CDs, and today the town's investments earning $250,000, and that's worth about, that's essentially 0.75% on the tax rate.
yeah, if you look at, I don't have it, but I can send this to you. It's in the quarterly performance report. Just gives more detail. I'll just pull out the most important stuff to you all. But over time, since inception, we've earned earned a total return of about 1.3%. The benchmark was about 1.23%, so we were 10 basis points higher. So that's fact. We've benefited from Fed raising rates and increases in yields on securities. But if you really want to look at the true number, it's that since inception number, which is about 1.3%. So that's including that time period where we were in 10 basis points on earnings on securities and increased until now. So
Really, you're our state employees credit union on a national basis.
I'll accept that.
It's a compliment.
Let's see. This is just some snapshots, just showing this data in different ways to you all. Just showing the portfolio market value as of the end of March, the yield at market and the yield at cost, and the duration of the portfolio. As I talked about, duration meaning the average maturity of the securities in the portfolio when they mature. So it's actually slightly down the end of April by 0.1. That's our views that we should be getting, short, just based on the inverted yield curve. Short-term securities or treasuries are earning more than longer term, so we're buying a lot of short paper right now. Talked about policy limits, and then always like to add what we're watching going forward. Money market curve, yield curve, so just the spread between CP and treasuries. As you can see here, agencies are underperforming treasuries, and this is looking at securities that mature in a year or less. Agencies are underperforming, just that solid blue line. The solid tannish line is where treasury yields are currently. The dotted tannish line, or I guess brownish line, my wife will kill me because I'm not describing colors properly here, is showing where treasuries were at the end of the year 2018, and then the solid yellow line is CP, and then the dotted line is dotted line, yellow line is CP at the end of the year. So you can see how spreads have contracted, and I showed that in a different slide, but that's just something that we're watching, the spread between the three securities. The flattening of the yield curve, I talked about that as well. Between the 3-month and the 10-year, it was at 9 basis points at the end of April, and then now it's inverted, where the 3-month treasury is higher than the 10-year, which is just mind-boggling at times. This other chart here at the bottom, the market implied Fed rate hike probability. This is the market essentially. You can see this is as of April 30th, we were at about a 67% probability of a hike, and now today we're at an 80%. So you can see just in that less than a month time frame, we're expecting the market is expecting a cut probability, a higher probability of a cut. And then just the yield environment, what's available for us to invest in, something that we're watching as well. And I just wanted to show this one chart about the stock market and the S&P 500. And what happened at the end of the fourth quarter until now, until April 30th. S&P 500 is probably one of the best measures of the equity markets. You can see that from September of 2018 to December of 2018, the market lost about 20%, and it's actually rebounded 25% in the first quarter. So from Christmas Eve until April 30th, you saw a 25% increase in the S&P 500. And that's just, a lot of it had to do with, we got some good initial information that the U.S. and China was going to come to a trade deal. We had the Powell pivot where the Fed said they're not going to increase rates anymore for 2019 and beyond, and just pay attention to the data. And then we just had good economic data. That first quarter GDP of 3.2% was really strong. Low unemployment, higher wages, and that was all positive. So I say all that to say, the economy is slowing, but it's not going straight down or negative. I mean, we'll start to see it slow. I think if the U.S. and China come to some kind of trade pact, that may help and give a bump, and things won't slow as much as they are now. So that's just something that we just have to pay attention to and see. Hopefully that trade deal gets hammered out in the near future, and we can have a little bit more certainty from a geopolitical perspective. That wraps up my comments for the day.
Right there at the end, when you were introducing this chart, you said that S&P is one of the best indicators of
The broader U.S. equity market.
So if the market reaches a point where, excuse me, the trade agreement that everybody's anticipating between the U.S. and China, if some reason that doesn't occur, or doesn't occur fairly soon, the market usually is going to react negatively to that. Is that right?
That's correct. And you're starting to see some of that now, with the market starting to, like, as of today, start to respond negatively to that. So it's getting priced in, is what we like to say. So we'll see how the next week to next week and a half goes. More information about Brexit, what's going to happen there, and then the G20 meeting is coming up in a few weeks. So what comes out, results of that meeting, may have an impact. If President Trump meets with the Chinese president, then that will show a positive sign. If they don't meet, then the market may react negatively to that. So we just have to have some improvement in trade talks between the U.S. and China, and I think that'll help add a little bit more certainty to the markets and not spook them as much as they have been lately.
Yeah. Very good.
Always appreciate you coming and trying to educate us and give us a lecture. Thank goodness you don't make us take a quiz.
Yeah.
I try, but it's complex topics, but try to break it down as simple as I can. Family's doing well.
Congratulations. I
Thank you.
understand
We're on our way to have number 3. So last time I saw you, we were at 2 under 3. Now we're going to be 3 under 3 in another month.
So you've had all 3 since you've been working with us. And my gosh, I don't know if it's been working with the town. It's been a blessing or what, but anyway, that's
You
a
guys have
coincidence.
spurred my economy.
The Garner water. I'm not sure whether you're better off working with us or not.
No, it's been a positive, great relationship.
Check back with us in 5 years, and we'll see how you're doing.
Right.
Well, how is Mama doing?
She's doing fine. She's hanging in there and being a trooper, and we were like, this is it.
You let her know that we ask about the family and her each time.
I sure will. Thank you so much. I appreciate it.
Thank you, Craig.
Deal.
Matt Roy Lance is going to talk about the South Garner Wingway.
While he's setting up, Mr. Mayor, I did get a message that Mr. Vance would not be able to make it tonight due to a conflict, so just wanted to relay that on to you.
Okay. Thank you very much. Again, my name is Matt Roylance. I'm here to talk to you tonight about the South Garner Greenway, the connector or extension. Just as a reminder for everybody and for anybody in the audience, this is the concept that we have been pursuing for a while now that would connect South Garner Greenway as it exists currently, that terminates in White Deer Park or in that vicinity, finding a way to connect that over to the Buffalo Road area, which would allow us to eventually connect to a regional Wake County greenway that would come through the Swift Creek area. So that's a study that we've been looking at for a while now. You may remember that in the fall of last year, we brought this to you in a much earlier stage where we were looking at some very preliminary route options and some cost estimates. And it was eye-opening because the expense of the greenway was much higher at that time, although we weren't necessarily finished with the project, much higher than expected. Since that time, we've done some more work, got some more input, and have got the report close to final. It's still technically a draft because we want to make sure that we incorporate the feedback from you all. But just wanted to bring this information back to you, and the majority of the presentation is going to be done by Graham Bruns with McAdams, the consultant on the project, who I know you met previously. I'll jump in a little bit towards the end just to talk about how we put some of the technical recommendations that Graham and his team have come up with into context with our financial picture and so on. But the majority of the presentation will be with Graham. So I'll turn it over to you.
Thanks, Matt. Again, my name is Graham Bruns, and I'm with McAdams. We've been working on this a little over a year. And just to jump into it, brief overview, we're just going to talk about where we've been in kind of the process that got us to this point. Touch on our public input, which happened after our last presentation to the council, and then our decision matrix and recommendations. So for everyone who is unfamiliar with the project, this is kind of a map of Garner, and the red box there is the study area around Lake Benson. This is a zoom in. We got White Deer Park, Lake Benson Park, and Buffalo Road is kind of running kind of northwest to southeast, and then just touches the park there. Again, this is briefly where we've been. We started this last spring with a kickoff with town staff. Did some field work last summer, did some modeling and some alternative developments, presented to you guys. And then our big milestone last year was our public input was late October, and had some very good feedback there. Since then, we tweaked some things, looked at different alternatives and how some may be included, some may not be. Had another workshop with staff to kind of firm up how we want to score each of the alternatives. And now we're at the recommendation and report and presenting tonight. So briefly, when we're looking at the Greenway and what we wanted to do as far as evaluate these alternatives, we had a roadmap, if you will, of the process. So we want to look at some alternatives that had been done back in 2013 and kind of weigh those in merit. Wanted to get a brief, or wanted to kind of get some goals from the town. So safety was a big goal. We inputted some industry standards in there, so design standards for greenways, what people are doing in the triangle and other parts of the state. From there, we built a base map. All of our data is based on GIS, available Wake County, Town of Garner. We have a fairly good contours that is from LiDAR. It's also from the state, so we could do some 3D modeling there. We pulled in flood model, roads, all that fun stuff. We actually laid out alignments and put grades on those alignments. So again, this is based on GIS. It's not survey level data. It's more of a 10,000 foot view, but it provides a fairly good idea of scope of what your grading might be, and at least a good idea for choosing an alternative to pursue further down the road after this project is gone. Our 3 alignments, we then plugged into public involvement. We talked with staff about all the pros and cons to each. We looked at materials so that we can minimize town maintenance costs. We looked at right-of-way issues. And then finally, we plugged all this into a decision matrix, which I'll cover here in a couple of minutes, but we wanted to have an objective way to kind of score each alignment against the others. And so we came up with a rating system and weighted each of the different criteria that we looked at. So moving on, this is, I think, what we have come up with as far as our 3 alignments, which is a little difficult to see on, I guess, the projector here, but each of the 3 have the same component going from the cul-de-sac up on Vandora Pines, or is it? It's the traffic circle down to midway to Lake Benson in front of the Lake Moore community. That is going to be a part of each, or whichever of the 3 alignments to pursue, or it can be a standalone project in and of itself. There's some benefit in that, but from there, we've got alignment A, option A, that goes kind of the north route, that crosses the creek immediately, and then connects up to Thompson Road and then Thompson Road Park, and then goes through the woods and connects kind of in the backside of White Deer. Option B and C kind of follow the sewer alignment down to the lake itself, and then crosses the lake on a separated pedestrian bridge from the road bridge. We looked at using the road bridge, and it wasn't going to be safety-wise, it wasn't going to be a great idea because there wasn't going to be sufficient separation for users of the trail. So both B and C use that bridge there at the lake. And option C is kind of just continuing the roadside option down and around, and then it connects right across from the memorial there at Lake Benson Park. Again, option A, this is all, I don't know if you have received the draft to review or not, but all this is in the draft, and what I've included on these next three is the cost of just the alignment that we're showing. It's not including trailheads, it's not including the multi-use path up to the roundabout. This is just to compare the three. So option A is coming at right around $2 million, and these numbers I updated about 3 weeks ago, so they're fairly recent. Option A had a little bit less impact flood model wise. We had a little bit easier crossing of the creeks coming in, so that it made it a little bit more attractive. Option B is actually a fairly attractive option, except there's a lot of right-of-way that would need to be acquired and a lot of wetland to be traversed, so that just increases the cost for either permitting or structures to get across all that. And this one came in around $3 million. Option C is also about $3 million, and the reason this one's a little bit more expensive than you would think is we're looking at proposed curb and gutter along Buffalo Road, so that just add that drainage system adds a little bit more cost than if it wasn't there. Yes, sir.
When I saw curb and gutter, that, I don't know whether it rang a bell or set off an alarm, but tell us the logic behind curb and gutter for this section.
The logic behind curb and gutter is basically to not take any additional right-of-way. There's, I think, 15 to 20 properties along Buffalo Road that that we'd be going in front of, and there's enough existing right-of-way to have the trail in there without additional right-of-way, but that requires a closed drainage system. So that would mean the curb and gutter, because I think right now it's just draining to a ditch. So in order to account for that additional, or it's not additional runoff, but for that runoff that's now currently in the ditch, you would have to put it in a pipe.
Thank you.
And that's it. This one is also fairly close to option C as far as price. It's a little bit more expensive, but it's comparable. But this one had the least amount of right-of-way needed to build it. We presented all three of these options at a public meeting October 28th. We had a great turnout. We had 50-plus people come out, and the majority of those filled out comment sheets. We had 108 comments total, and we also had an online comment sheet and maps posted online for folks who couldn't come out. Option B was most popular, which was the more expensive option that kind of fronts the lake. And I say that with a caveat because this is a non-scientific calculation. This is not scientific by any means, because it's a self-selecting group of people who chose to fill out comment sheets, and that's how we have to take it. But it was a very good turnout. We took those and put it into, this is our decision matrix, and our weights for each of the categories. And these are all comparing against themselves. The biggest factor in how we weighted this is cost. Public input had the second highest, along with right-of-way impacts, and we rounded out flood study impacts, structures, and the smaller things were connectivity, maintenance issues, utilities. And option A actually won out in the decision matrix. And again, that's mainly due to cost in the flood study. Structures was a little bit more in favor of option A because we didn't have the additional bridge to cross one of the creeks. But all that kind of played into our recommendation for option A. With that, I will say there are, all three options should be kept on the table for now. And conversations with right-of-way and additional strategies for funding should be pursued while that's happening. But I'll let Matt talk about a couple of these things.
Yeah, and one other thing to add too, that it was, I think Graham would agree, that the feedback from the community was relatively close. I mean, A and B were both reasonably popular. There wasn't a huge difference between them.
Correct.
But B was, if you were tallying votes, B did come out the winner in a relatively even race. So, as you heard from Graham, the analysis that the team went through as part of the study would suggest that if we're going to move forward, option A would be the best option to move forward with, according to the study. But I think it's important to acknowledge the conversation that we've had back when we went, brought it to you all as part of the work session and some of the discussion we've had in retreat since then, that there are some issues, and that, the cost is the most significant one. There's, the budget for this project went back when it was originally presented as part of the bond referendum was much, much lower. We've got somewhere around $1.1 million earmarked for this project that dates back a number of years, and by the time you include the Graham showed you the cost of the segments for each of the route options, but when you also factor in the multi-use path segment that was not included in that cost, and contingency and design costs and other things like that, we're looking at a $4+ million project to as much as a $6+ million project, and that's significantly beyond what was originally anticipated and what we have the money to pay for. I mean, there certainly are other ways that we could close that gap. There's some grant funding opportunities and things like that, and Graham's going to talk a little bit about that on the next slides. But the feedback that we heard, and I think it makes sense, is that this project is really a much more significant undertaking now that we have a full understanding of the cost than what it was when it was originally presented to voters, and that gave you all some pause when you were considering whether to move forward with grant funding and that kind of thing. And I think that's very reasonable. This project is certainly not going to be as expensive as the rec center or town hall, but it would be among the more expensive capital projects that the town has undertaken, and it's worth considering that. The other thing too is there are some key property owners on both option route alternative A and B that are hesitant to give the town access, to allow us to purchase an easement or some sort of right-of-way. So there are definitely some right-of-way challenges no matter which route option we went with, and those are potentially significant as well. So when you put all that together, staff's recommendation is that we just hit the brakes a little bit, that it'd probably be best to put the project on hold, even though that is disappointing both for us, and I know there's a lot of members of the community that were excited to see this project move forward, and hopefully it will at some point. But we think, particularly given that the Parks Department is in the middle of updating their comprehensive master plan, and that a big part of that is a system-wide greenway plan, that it makes sense to just hold off and see what the results of that plan are. The The Greenway System Plan is going to give us a chance to take a look not just at this Greenway segment, but at all the potential Greenway segments that we could build anywhere in the town that might make all sorts of different connections. And when we have a chance to evaluate all of those and rank and prioritize all of those, I mean, we still feel like this would be among the top priority Greenway segments, but it's certainly possible that there might be one or two or three other ones that are, score just as well or maybe even higher. And so it's probably worth waiting, getting the results of that, because we've not had a system-wide Greenway plan done before, so this would be new information that might help us make a better decision. And then when the time comes that we're ready to do another bond, 2021 is the date that we've currently talked about. Whatever the highest scoring Greenway segment or segments would be, the sort of projects that we could consider including at that time. So that's aside from the technical aspect of which would be the best Greenway option, given where we are as a town, staff recommendation would be to wait till after the Greenway system report is done and then look at the next bond as a potential funding source.
Pat, can you just touch on if and when this is built, this will allow the town to, in essence, tie in with the Wake County system, or the projection is that this will put us closer to that goal, is that right?
Yeah, let me back up. Up there. Yep, got a little too excited on the buttons there. Yes, Wake County has, as part of their Greenway plan for the county, the possibility of, it is not a possibility, it's something that they definitely are going to do at some point, connecting Lake Wheeler to Lake Benson along the Swift Creek corridor. And so you can, there's a line, this little dotted green line shows where the Wake County, as it's currently drawn, this is where the Wake County Greenway would connect with the town of Garner. And so our interest in doing this is that potentially if we have a way, whether it's option A or any of the other options, if we can get people over to here, that then opens up a whole nother universe of Greenway connections and people that might want to run or ride their bike or commute or whatever they might do on the Greenway. Once you hit that point, then you're talking about many, many more miles that it would open up. So in the long run, that's the vision. Wake County is not going to start building that Greenway immediately either. So I think in both cases, there'll be some time before that vision is a reality.
And would it be fair to say that if we tie into the Wake County system, this connecting point here would be the logical one? At this point, there aren't other tie-ins necessarily that we're projected to be building close to, is that right?
Well, actually, I think there are other possibilities for how we could tie on to other, they may not be Wake County, but also the city of Raleigh. There are other aspects of a bigger Greenway network that we could connect to, and those will come out as part of the Greenway system plan. So I wouldn't say there are lots and lots of other options, but there are at least a couple other possibilities that are worth considering that we'll be able to go through in more detail when we go through the process with that system-wide Greenway plan.
Thank you.
I know you're recommending we put it on hold. I'm not necessarily objecting to that, but looking at alternate A, did we have a discussion at one time, about, or was there ever a recommendation on A that it parallel the southern side of Thompson Road Park, even though we would have to purchase property? And I think I brought up the idea of putting it through Thompson Road to keep from having to buy property, but then we got the negative feedback. Well, then that's going to change the use of, impact the use or the space available for Thompson Road Park. So if you were to locate it just along the southern boundary of Thompson Road Park, even though that's acquisition, would that be significant enough to change your mind about A being the preferred project?
I would say no. I think the challenges were just some things that were in the UDO and buffers with parks that was going to require additional right-of-way that we could avoid if we went around the north side. But
Yeah, I agree. Some of the issues are the driveway through the parking area is on the southern side, and the lighting for the fields is on the southern side. I don't know how much success we would have getting the land access to go further, the right-of-way beyond the borders of the park. And I don't think it would change the analysis, I guess would be the answer.
That's pretty flat land, and without, if it was sloping, that's a different consideration. But laterally, I'll say it's along the length of the path. Laterally, it would be flat, slopes a little bit towards the rear. What kind of right-of-way would be required for the type of route we would be recommending?
I think we would probably require, I think it was like an additional 35 feet, and that's just to have enough room on either side of a 10-foot trail for mowing. So it could probably be less than that. But it could very well happen on the south side.
Well, actually, I was thinking that, and I'm too far into it since we're putting it on the shelf, but I put the thought out there that I would suspect that you'd probably put some bushes that were at least head high to keep everybody from seeing each other as you walk along there. But for that reason, going around the bushes. So I was hoping the number was going to be no more than 30 feet, but you've told me what I was looking for. That today is no day to be worried about the details. I wanted the thought to go out there because it'll be coming back to us. I would, on a broader scope, at this kind of cost, it's nice with the idea of tying into the Wake County and that sort of thing. And if there's a strong enough incentive through grants, if it was tied into them, that's one consideration. But at the kind of cost we're looking at, I think the users are going to say, well, let's concentrate on Garner users if we're going to have to put this money into it, as opposed to fixing it up for everybody else. And I'm hoping there'll be some other projects that will go together in a nice package that next time we do have a referendum.
Let me talk about some funding while we're on that subject. So I've got several for these funding strategies. What our recommendation is going to be is leveraging existing either CIP money or bond money into one of these other programs, either CMAQ, which is typically used for a lot of like sidewalk projects, but has been used for greenways. The transportation alternative is one of the bigger ones, and both of those are federal monies that get administered by NCDOT. And the matches, so both those have a certain percentage match, and I think all those numbers are in the report, but it's somewhere between 15 and 30% match that the town has to give in addition to, towards that end goal project. So I think we would be positioned fairly well with some additional funds to build even one of the more expensive ones with the right funding strategy. Now, I will back up and say that when you do apply for these grants, they are competitive, and you do have to go up against, depending on which one it is, either different projects in the MPO or across the state. But I think with how Garner is positioned, especially with the master plan coming out, that'll give a lot of teeth and probably a lot of points onto this project specifically. So I think that's kind of, we've got somewhat of a roadmap in the study itself, but we're also available for the town to help fill out applications and produce exhibits moving forward. And then finally, I think, no matter what direction we go, I think the town is wanting to build this at some point in the future. if it's, 2 years from now or 10 years from now. So conversations with landowners, moving forward, just keep an open channel of a conversation for any potential, either turnover or people willing to sell easements.
Could you just speculate a minute if you want to, give us a rosy scenario? In the best case scenario, could you project how grants and some of these other programs, what potential it has to reduce the town's payment,
Yeah,
or
so,
by percentage or by dollar amount? What-
yeah, let me pull one of the.
I saw that somewhere in the draft.
Yeah, one of the
Yeah.
total costs here, so let's say you get grant money, and I think you can use multiple grants too, and kind of leverage them against themselves, depending on how you have that set up. It's a lot more complicated, and it's not common, but it can be done. But let's say you get a grant that says you have to put up 20%. So on, we'll say option B, and this is construction, today numbers, I've got it 4.2 million. So let's see. Let's say 4.2 million times 20%. So that's 840,000 that the town would have to pay for that construction. Now that's not the engineering. That's not contingency, and if you do use a lot of these grants, you've got to have NCDOT CEI services for inspections and testing. So that doesn't include that, but you get a lot closer to what you actually have, and you could spend. So I think the money's there, and especially moving forward, if we're not building this today, it gives us time to kind of back up and form a better strategy for applications, and crafting those that would be more appealing and score better in whichever scoring process they go through. But I think it's definitely doable that the town would pay $1 to $2 million out of pocket and have the rest covered by grants.
It would be fair to say that if you project out, say, 5 years or somewhere out there, it's definitely not going to get less costly to build this greenway.
It's not going to get less costly. We do have, as part of the plan, an escalation calculator. So if you do decide that you've got bonds in 2021, and you want to build it in 2025, we've got the equation in there. You just plug in the numbers for that date, and it'll tell you about, based on today's estimate, about what that will cost. That doesn't take into account, the geopolitical tariffs and the economy crashing and a bunch of contractors becoming available. But as for today's numbers, it's a good tool.
Whatever option, whenever it's done, it's going to still cost the town multiple millions of dollars. I mean, even if you got the 20%, you said $840,000. That was based off the $4 million. If you did option B, there's still $2.5 more million. So you're still at multiple millions of dollars on any option. So this is not going to be. That's why I think it's going to be put before the voters in a bond vote, and then you learn. And then you decide how you want to leverage grants and so forth. I appreciate the information. I'm not a option A fan at all. I think option B is the route to go. Even though I've expressed concern about cost, I have a lot of concern about option A. In particular, is that it's going on property that'll probably be residential one day, and yes, you can have an easement, but in Thompson Road Park, I just don't know if the idea of going through a greenway is going through and watching kids practice football or soccer. I just don't know if that's the ideal way for a greenway, unless you're going to buffer both sides. I don't think that's the way. And the property which is directly north of that, which is owned by the Thompson family, may one day be a subdivision. We don't know. It's just a lot more going through residential. When you talk about the Wake County corridor, they're going on the Swift Creek corridor. I mean, there'll be some a little through neighborhoods, but maybe they're going through a creek corridor, which is what option B does. I know option B has some additional cost, but I also know that when you cross, and the bridge crossing the lake is expensive. Good Lord, we've talked about it before, but that's your photograph, that's your picture. That's when you look there and you walk by it and people got the camera, that's the picture. You're not going to cross a lake anywhere else in Garner because we don't have any other lakes to cross. Unless you can go across the pond, across the street over here or something. It's just, that's part of the selling point of that. I know Buck mentioned about, you know, focus on the Garner part, but I think what people want is to connect to the Raleigh Park, because if it can go to Lake Wheeler, that's what they want. And so it's part of a package, and the master plan will come out and show us other greenways to look at too in other parts of town. But yeah, I think that, you know, you got to kind of put it on the shelf. At least this time we have much more detail you've given us than we've previously had. I mean, the $750,000 that we came up in 2012 to put up on the 2013 bond referendum was just...
It was atmospheric extraction.
Yes, but one of Buck's favorite new terms, atmospheric extraction. So I appreciate what you provided with us, because it is detailed, and it's again, unless something dramatically changes, if and when it's moving forward in 1 year, 2 years, 3 years, whatever, you basically take it off the shelf, you said, and update the numbers, which shouldn't be that complicated, because you already got a 5% built in. And then maybe put it before the voters, whether it's a option or three options, or do you want to fund X amount of millions of dollars in greenways, and you decide what option to choose. So I appreciate the information you provided, because it's, I think we all realize that we're going to put a connector on Buffalo Road one way or the other. We got to get that sidewalk connector to get down to the other greenway, whatever path is chosen. And yeah, I think you suggested, or you didn't suggest it, but you said for consideration, that could just be a separate project.
Correct.
Because that's basically curb and gutter, and I think 10-foot wide, right?
That's right.
That was going to be a 10-foot wide path. Would that be asphalt or concrete? Asphalt?
Probably asphalt, yes.
Asphalt. So just 10-foot wide path, multi-purpose path, or whatever you called it. Okay.
Yeah. Yeah.
Thanks.
Yeah, no problem. Any other questions, Buck?
Yes. Well, maybe this is really for Matt. If this is a draft, but we're talking about putting it on hold, so are we going to finish the draft into a complete report, or are we just going to stop where we are?
I think we're going to finish it to a complete report, and you'll have a recommendation in that report. But I think the recommendation is what we've kind of laid out, where this is the preferred objective recommendation, but you know, don't burn any bridges, and again, you know, figure out funding strategy with the master plan coming out.
I think so, and the report also talks about that, though A is the way the scoring fell out, that B is pretty close second, and either one of them would be reasonable alternatives to pursue. But we were anticipating incorporating any feedback that you all have, and then making it final, so close that chapter. Mm-hmm.
It's going to be a future council that makes this decision, so that's getting the comments in now. I noticed there's several places in there, and Matt, I'll communicate with you, but some things that need to be taken from a draft to to a finished product. There was, in particular, Graham, that was on some of the maps. It talked about access would have to be acquired. We have access from Buffalo Road down to get across the creek, if I'm not mistaken. Maybe we don't. I think we've got it down to city property, but that appears on 2 or 3 of the maps. One place there was a meeting about, it was held in October of 2019, and that was probably EMET 18. And
yeah. And there are several typos. Again, it is a draft, and I even saw some reading it today that, you know, just little things that need to be tweaked. But yes, it'll be a complete document after we incorporate any.
And when would you expect to finish it up?
I would say early June, mid-June. June's this week, so probably mid-June.
Well, the end of the fiscal year then,
yes.
So we could have that cleared off the books and have a clean slate, not be carrying anything over into the next year.
Yep, that's the intent.
Sounds good.
Matt, did you say, will this be an element at all in the comprehensive park plan that we're looking at?
Yes, the greenways generally will be, and the results of this work will be folded into the larger system-wide plan. The rest of that plan, not every potential greenway segment across town will be studied at this level of detail, of course, because we did a whole separate study on this one, but at some sort of higher level of study, it'll be folded in along with all the other options.
Right, so we will see something about it again in that plan, probably.
Yes.
Yep, okay.
Any more questions? Thank you, guys. Maury Hare. Maury Hare. Oh. How?
Mayor, members of council, just before Maury begins with her part of the presentation and the introduction of our guests tonight, just wanted to provide some historical reference just to get everyone who may be here in attendance or either watching sort of caught up to where this discussion tonight comes from. As council is aware, when we started the historic downtown Garner plan back in 2009, one of the things that we were wanting to make sure we did with that plan was root all of the recommendations from that plan in real market data and real needs that the community could realize, and not really base that on just some aspirational drawings that are sometimes done with those long-range visions and planning efforts. And the data that we had commissioned during that plan led us to developing a plan that was proposed in several stages. While some of the designs and some of the locations are in different places than they were in that plan, the key elements there of the number of square feet needed for certain types of anchors, like what has become our Garner Recreation Center as a civic anchor, did carry through from that plan. So in addition to the desire to, with assistance for future development downtown that Maury and our guests will talk about tonight, one of the things that we think is important to do is for us to refresh the market data that went into the 2009-2010 historic downtown Garner plan, because we have lots of opportunities in the downtown area now that will go beyond the scope of what we're going to propose that our partners at DFI help us with in terms of this particular site. And so the timing is really good to be able to get a refresh of that market data. We've had lots of recent meetings with property owners, with prospective developers in that area, again, close by, but not exactly on the site that we're talking about here by the rec center. And we think that it'll be very important to have that market data refreshed as a part of the overall plan for the development site near the recreation center. So I just wanted to take a moment to bring everyone up to the historical context that we're talking about tonight, not just the opportunity for this one site, but an opportunity to go back and revisit the data that we need to update for the entire downtown redevelopment opportunity. So with that, I'll turn it over to Maury.
Good evening, Council. Thank you for the opportunity this evening to speak with you. So when I started as the Downtown Development Manager about 4 years ago, I knew that this project, seeing private development of the pad, was going to be the biggest and best opportunity for downtown to expand its commercial footprint that I would likely have in the time I served in this role. So it has been a long time coming, but we're very glad to be bringing you information tonight about the Development Finance Initiative and the services that they can provide. Before I hand it over to them, I wanted to just give a little bit of background, also refreshing sort of what the Downtown Garner Association and our Downtown Development Committee has been doing specifically for the last 2 years to focus on this. So when the rec center was under construction, we kind of realized this is the time that we need to be getting ready for when the time is right to develop the pad. So we started doing a lot of research and looking at what kind of uses do we want to see there. The committee was able to look at it and say, there's no space for a full-size restaurant anywhere in downtown at the moment in the historic district. So, in addition to just being the biggest and best opportunity for commercial development, it's probably also our best opportunity to see a full-size restaurant come in, which would be a great, benefit to all the people coming to the rec center, and also furthering, our vision of becoming the center for local flavor and flair in Garner. So we were able to sort of identify that, and knowing, we found out also that we would want to see office or residential space above, So they did that. One of the really great things that came out of that committee was we realized we needed to be able to start casting vision for this pad. So and we call it the pad. So as you can imagine, that's not exactly the catchiest name. So we needed something specifically visual that we could use to kind of start selling our stakeholders, community residents, and finally developers on this idea. The opportunity for that came along when the town was doing the Garner Forward Comprehensive Plan. Downtown was not initially named as an opportunity site, but we took advantage of the pulling out of sites to ask a consultant to do some renderings for us. And so what you're looking at right now is the conceptual drawing they kind of gave us, specifically focused on what could go on the pad. And that, we don't necessarily expect it to look like that. It's just kind of a placeholder, but it covers a lot of things that we would want to see, things that we've heard that people want to see, rooftop, dining and things like that. But it's also just a really great building that helps connect the historic business district. It kind of bridges the gap between the historic business district and the new rec center. So this is one of those things that has been great. We've used it on marketing materials. We've really used it in our presentations and on our website to help cast vision for where we see downtown going over the next 10 to 20 years. So we're so grateful that the time has finally come. The rec center is nearing completion. Council is ready to start hearing how do we go forward with developing this pad. And so when I had the opportunity to attend a School of Government training in February, we heard about the Development Finance Initiative. And because of that, we got to learn more about their pre-development services. And so what has come out of that is what John talked about, that they will be doing, in addition to providing services to help us have this pad developed, they'll also be providing a market update, which is absolutely essential for us right now as a downtown, because we want to be able to share accurate and up-to-date information with people that are interested in developing. In the last year, I think we've talked with at least 3 or 4 different developers who either have been planning to develop and we're waiting for the right time, or who are looking for opportunities to develop, and we want to be able to support them by providing accurate information that, even though we're doing it specifically for this one property, our downtown is just the right size so that that information will be useful to pretty much anyone developing in our downtown district. So without anything further to say, I would like to turn it over to Marcia Parrott and Rory Dowling from Development Finance Initiative, and they'll give you some overview of the proposal they've given us.
Welcome, guys.
Thank you. Yeah, thank you all for having us tonight. We're very excited to be here. Thanks, Maury. Thanks, John, for the introduction. My name is Rory Dowling. I'm a development advisor for the Development Finance Initiative program with UNC School of Government. I'm joined tonight by Marcia Parrott, who is the Associate Director of DFI, as well as Francine Stefan, who is our Deputy Director. We wanted to bring a big team here tonight. And what we're going to be talking about really is an overview of who we are. I know you all are probably very familiar with School of Government, but maybe some in the audience are not. So we'll give a little bit of background on School of Government, as well as what the Development Finance Initiative is doing across the state, why we're doing it, why there's a need for our services. And then I'm going to turn it over to Marcia so she can talk a little bit more specifically about the proposal that you all have before you for engaging our services for the PAD, as we'll call it. So UNC School of Government, as you all probably know, is the largest university-based local government training, advisory, and research organization in the U.S. It's very unique, been around since the 1940s. Serves 12,000 plus public officials each year. These are through courses that maybe some of you all have attended, webinars, conferences, publications, and then the staff there, of course, is there to answer your calls and emails as you run into questions about doing your job. We're nonpartisan, policy neutral, and must be responsive to clients' needs. So there's a reason why DFI was started around 2011, and it really hits on the point that as local government, whether you like it or not, you are engaged in private sector development activities. A lot of times you are significant landowners, and so there is always a reason for you all to be engaged in private sector development activities, both on a proactive approach and a reactive approach, which I'll get into in just a second. There are certain statutes, of course, that authorize these activities, but often towns, particularly towns of this size, don't have that development expertise on staff to respond to some of those challenges that you face. These requests became more and more frequent at the School of Government at about that 2010-2011 timeline. Our executive director, Tyler Mulligan, who maybe some of you know or are familiar with, was getting increasing a number of calls trying to, local governments trying to get to the bottom of should we make this investment and what does our return on investment look like? And that was something at the time that the School of Government just could not respond to. They didn't have the expertise on staff. They could advise as far as the legal statutes that you could use to enter into these public-private partnerships, but they could not really advise on the key question of should you engage in this public-private partnership. So about that time, Tyler said, wouldn't it be great if we could build a team of real estate development experts to respond to those challenges and offer that as a program through the UNC School of Government. We received a grant from the LGFCU in about 2011, amount of $1 million, I think it was, and it's since been renewed for the past 8 years, given the amount of work we've done across the state. And we are active, as you can see here, across the entire state. We have even done a little bit of work in Virginia and a little bit in South Carolina. But we have collaborated now with well over, I think, 80 communities across the state, close to 135 different projects. And these are all projects that are geared towards attracting private investment for transformative projects by providing that expertise that I mentioned. We have a team of real estate experts, of planning experts, of landscape architecture experts. We obviously have the legal side as well, working with the School of Government. We have the ability to access all the resources at SOG at any time. So it's a really vast team as far as our ability to respond to these types of challenges. I mentioned that our projects are typically either reactive or proactive. A little bit more on that. The reactive approach is when, let's say, the town of Garner is approached by a developer who says, I want to do a development on this piece of property in downtown, but I need $1 million. A lot of times DFI will get engaged to say, okay, we need somebody to do a third-party review. The developer has given us this pro forma. We don't really understand how to read a pro forma, or they're telling us that we need to provide this incentive. We don't know whether, one, we can provide that incentive legally, or two, whether we should from a financial standpoint. So we'll come in and do a third-party review. We'll look over the pro forma. We'll make sure that the development assumptions being used by the developer are accurate and are in line with what we're seeing in the private sector at the time. And then we'll also make recommendations on whether, one, we think it's wise for the municipality to proceed with the developer, and two, really how and what would be in their best interest to proceed. The other type of project, the more frequent project that we see, and the one that we're here to talk about today, is the more proactive approach. This is when you're actually starting at the idea level and saying, we've got site control on this piece of property. We know there are certain public interests we'd like to build into the private development aspect of this property. Let's go through a full pre-development process, identify what sort of program can be supported by the market and financially, what sort of participation we are going to need on our end, and go out and proactively try and find a private development partner to come and execute that project, abiding by sort of the guidelines that we've put in place. So that's the proactive approach that we're going to talk more in depth about today. Any questions so far? This is a good chart we like to show that sort of shows all the basic levels of the pre-development process, all the way from idea at the very beginning to acquisition and construction, and then the eventual sale, occupancy, or investment management. What's key about this chart is to recognize that as a private developer, the majority of your money is spent on the front end, right? During that site control and pre-development process, part of the process. But it's not until the very end that you actually come and engage with the local government to try to get the project entitled, to try to get any zoning changes, to try to get any density allowances that you need in order to execute the project. What that means is that there's quite a bit of risk put on the front end. That's where the majority of the risk is, which means that's the reason why a lot of these projects don't end up happening, because there's a lot of uncertainty in getting to that entitlement stage, and the private developer is typically not willing to spend that money on projects where there is that uncertainty tied to the local government. And that's where we think our model, our pre-development process really comes into play. We think that by removing some of that risk on the front end, it gives the private sector a little bit more peace of mind. They know what to expect, and therefore you can create a more successful public-private partnership and attract this private development that has been sitting on the sideline due to that uncertainty. This is showing the four main pillars of our pre-development process, with the end-all goal as arriving at that development plan, that sort of nexus where they all fit together, and then that is when we would actually go out with a solicitation to attract that private development partner. So typically we begin with a market analysis. Maury was talking a little bit about that. Obviously you all have done some market research before. I think it was the mid-2000s, 2007, 2008 was the last time you all got a full in-depth look at where the market was headed. A lot has changed since then, obviously, in this area, and so what we would be doing is doing very comprehensive market analysis, looking at not only current supply, but also where the market's headed over the next 5 to 10 years. So taking a look at residential development potential, commercial, which includes office, retail, to really look at, okay, where are the trends and where is Garner going to be 5 to 10 years from now. With that, we will start moving into the site analysis component of our work, which would mean engaging a third-party architect, which is what we do with our projects, so that we can get a real sense of, okay, using that market data, based on what we know about the site, parking, any other constraints, what sort of program do we think makes sense using that data and based on the site constraints that we're dealing with. Public interest is a component of our process that is really actually being worked on from the get-go. That's one of the first things we do start with, is identifying the stakeholders, and we really make an effort to engage the public as much as you all ask us, but it's certainly our recommendation that they're there just about every step of the way, so that they're informed, as well as participating in identifying what those public interests are that should be a part of the inevitable development plan. Of course, no project is possible without financial feasibility, so that is sort of where the rubber meets the road. We do extensive modeling on our end, looking at a variety of options once we have sort of an idea of what a development program could look like, and we come to you showing you what the project looks like from a financial feasibility standpoint, and that's sort of when we are able to identify if there are any gaps in financing, and that's when we start talking about whether there is any necessary public participation that can be built into the project, what those public participation options look like in order to make this an attractive project to the private sector. Once we sort of go through those steps, we come to you with a solicitation for development, an RFP, call it, a request for proposal. And once that request for proposal has been approved by council, we would actually go out and solicit interest from private developers. We have a very extensive Rolodex, having now done this for the past 9 years, particularly in the Triangle, for firms that we think would be interested in a project of this size and located in this area. And we use those resources to start garnering interest from the private sector for whatever that project looks like. This is just putting that last graphic to more of a timeline to give you a sense of how this typically lays out. Our goal with this project would be to have a solicitation approved by you all by the beginning of the summer next year so that we can actually be soliciting interest from the private sector at that time. We typically say it's about a 9 to 12 month process to begin and have a developer at the table. You all have obviously put a lot of work already into this site, so I think there are some synergies there that we can work from to increase that timeline. I think there are already probably a number of stakeholders that are interested in coming to the table. So part of that work has been done. You obviously have a bit of a vision that we can work from, so that when we start working with our third-party architect partner, they're going to already have a sense of sort of the urban fabric that you all want to see with that site. One key note here to see, I'll go back to that public engagement aspect, is that it really is something that is for the duration of the project. So from day one, we're thinking about the public engagement aspects, and that really stays with us all the way up until the private developer is selected by you all. So with that, I'm going to turn it over to Marcia to talk through one of our case studies, and she'll dive into our proposal.
Great. So this case study is one of DFI's first pre-development projects that is currently under construction. I think it does a good job of illustrating our pre-development services. Are y'all familiar with the Water Street parking deck in Wilmington? I see a couple nods. No. There's a photo of it here in the middle. You can see it's right along the water on Water Street, hence the name, and is really part of that kind of postcard view of downtown Wilmington. This was a parking deck owned by the city of Wilmington, but was becoming aging, functionally obsolete. The city had actually sold it to developers twice and ended up having to buy it back because it was such a complex site to redevelop. Another challenge was that there were a lot of public interests that the city wanted to see incorporated. Maybe not a challenge, but an opportunity. Things like being able to have some public space that allowed folks to see the fireworks, making sure that the views of the Murchison building, this very historic, iconic building, was still preserved from the waterfront. There was a little pocket park on the street above called Bijou Park that folks wanted to make sure they could still cut through the middle of that parking lot to get through. And that's just a few of the public interests. There were a lot of important desires around parking, around retail space that the community wanted to see on this site. So we conducted pre-development services for Wilmington. It involved a lot of community engagement. And ultimately, we identified a program that helped to marry all those different interests, not just the visibility of the Murchison building, activating Water Street, creating cut-throughs, letting people see fireworks, but also creating a program that was feasible from the private sector perspective, that met those return hurdles and got the private development interest in the door that the city had hoped to see. Something that Rory talked about when explaining the pre-development process is all the time and money that it takes, and a lot of uncertainty leading up to that point of entitlement, whether or not a private developer knows whether their project will be approved or be a success. And public interest are a part of that too. I'm guessing in a community like Garner that has a lot of really great character and heritage, you want to be careful about which private development partners you bring into your community. You want to be thoughtful about who you select, what their track record is. I bet if you were to put a for sale sign up on that development pad, you would certainly get some interest, but it doesn't necessarily mean that you would get the type of interest that you're looking for. So really what our job is to bring private investment to the table, but try and identify those public interests, those things that you really want to make sure you're going to see in that development to get you the right partner. So at Wilmington, we think is a really great example of that that's happening right now. A couple other examples I think worth mentioning that might be more relevant. Sorry, I'm too short to see the folks that are over here. We worked with Fuquay Varina. I'm sure y'all are familiar with Fuquay Varina. They came to us looking for a project that would connect Fuquay and Varina a little bit more. As you might know, those downtowns are very distinct, right? They don't feel connected at all. So they asked us to think about a project on either end of those downtowns that might help to kind of bring that energy north. It will be a while, but ultimately we did end up identifying a project on the northern side of the Fuquay downtown, that currently they have a developer in place and they're negotiating that development agreement. They were very sensitive in Fuquay Varina. This was the first time that they'd seen new construction or infill construction. They have kind of a low density 1 to 3 story building downtown with some very nice historic buildings. So they wanted to make sure that any new development was very much in character with their downtown. We're also working with the town of Wake Forest, so another kind of neighbor with similar dynamics on a new construction infill site across from their town hall in their downtown. So a couple examples of projects, and happy to share more. Scope of services is here. I realize this is way too small to be legible for anyone to read, but I know that you do have this scope of services in your agenda packets. Also happy to talk through that scope of services as well as our fee. We have somewhat of an unusual model in that we charge a kind of one-time flat fee for our scope of services, and then we pass on the rest of our fee to the private sector in the form of a contingency fee. So we take 1% of that developer's fee. We think that helps us to align our interests with those of the town to make sure that we also have some skin in the game in bringing a developer to the table, and also helps to value our work for who really holds that value, which is the private sector, right? At the end of this, we hopefully are bringing them a project that will be successful, and we've eliminated a lot of that risk and uncertainty. So I'll stop there, have us do less of the talking, and have y'all ask us some questions about our proposal, our services, or whatever you'd like.
Who's got it first? You going?
I'm going to ask her just to, well, there'll be more serious questions. The pictures you were showing in Wilmington on Front Street, is that pretty close to a federal building down there?
Federal building, the one that's, two blocks south on the river. Yep. It is.
Yeah, okay.
Yep.
That parking deck looks like a place I used to park when I'd go down to that building there, so.
Yeah.
It was probably only 30% full at the time.
Yeah, and it turned over several times, as I understand.
Yep.
Right, exactly.
The map that showed the state of North Carolina, are all those projects, maybe I should have picked up on that, are they pending projects in essence, or things you're still working on? A lot of them are projects that you've long since completed and moved on, is that right?
They're all different kinds of projects. Many of these are pending where there's development agreements in place and we expect them to break ground or are starting to break ground. There's many third-party reviews. You heard Rory describe that kind of reactive type of project, and that, especially in our early days, was one that we got a lot of requests for. So all kinds of projects. Any in particular, any communities you see that you're curious about or interested
Yes.
in?
Kinston.
Kinston.
Picked a good one.
You picked the right person to think about Kinston.
I hope it's not the farmer and the chef, or the chef and the farmer.
No, it's not the chef and the farmer. We can't take credit for
Thank
that. But it is building off that energy. So actually, we've worked a lot in the neighborhood that's adjacent to Chef and the Farmer. So there's a historic residential neighborhood called Mitchelltown that's kind of visible from the Chef and the Farmer and right next to downtown. So we worked with them over the past, really since 2012, so 7 years now, to help redevelop that neighborhood that had a lot of beautiful historic assets, but at the time when we got started, 1 in 4 homes were vacant. They were dealing with a lot of heirs properties issues, a lot of absentee property owners, so we helped them create an urban redevelopment area, did a lot of neighborhood planning to help get private investment there, and also help advise the city on what co-investment they should be doing in the public infrastructure to help facilitate and build confidence for the private sector, but not getting too ahead, right? Doing it in tandem with the private sector. So since then, now the vacancy rate is more about 10 to 15% from 25%, so a huge turnaround, and about I think 60 homes in a 200 home area have been redeveloped since that time. So that's the bulk of our work. We're now putting a lot of our energy into downtown and looking at the success that Chef and the Farmer and the tourism that's been brought there, but trying to build on that momentum and help the city think about how they can support more investment in downtown, not just Chef and the Farmer, which has been a great asset.
I'd be a little curious about the town of Burnsville. I just spent a week up there with some family members in a mountainous area up there. What kind of project did you have going on there?
Yeah, we did. It was another third-party review for the old historic New Ray Hotel that's right there on the square, the white building,
Yep.
2-story. This was back in 2013, maybe 2014, but there were some interested parties that were looking at redeveloping that structure, and they didn't really have the development experience. They sort of came to the town and said, what can you help us with? And the town said, we don't really know. What are you trying to do? And so they brought us in to get everybody at the table and say, here are some strategies. Here's how you use here's how you use historic tax credits. Here's sort of what we think is potential demand for a hotel. Yeah, I haven't checked in with Burnsville in a while, but I know they've had some exciting things happen in their downtown recently.
They're doing a lot with the arts for redevelopment.
Yeah.
Yeah, they talked about a town center that they recently opened there, that they were getting ready to have a little convention in when we were leaving, but at any rate, yeah, they seem to be pretty excited about it.
Yeah.
Frequently in small towns where we're not sure if we were to go to solicitation how much developer interest we would get, it tends to be the local folks, the kind of hometown heroes who are the first investors. So a lot of our projects, particularly those in small towns, are us doing that type of advising that Rory described, where we're helping local investors who are willing to take on that first risk and be a first mover, help them kind of build their acumen to execute on a project like that. Questions about the scope of services that y'all have before you? Essentially, it's our pre-development services, doing that market research, doing financial feasibility, figuring out how those market uses can fit onto a site. And once we've landed on a program that's agreeable to you all and to the public, then actively marketing that to the development community and helping you all select a development partner. Our services also go beyond just the selection of a development partner, but we're also there with you through the negotiation and execution of a development agreement. So the development agreement is that document that sets forth the roles and responsibilities for the private sector in executing a partnership. And we help you make sure that you're well protected in that development agreement and that key milestones are met, and adjust as things come up and react to those as they inevitably will.
I must have done a good job. Nobody's got any questions.
Mr. Kennedy has got a novel over here. I'll try to write down a couple of, maybe this question is better for staff. How much, what's the footprint of that pad, Mari? I know you can go up multiple stories, but what is the footprint, or we don't know exactly without some analysis about the site?
We're estimating about 8,000 square feet.
As a
footprint,
one story,
yeah, so you're looking at 16 to 24, depending on what the market demands.
And on the one item here, on item 5, you talk about site constraints. And one item that's always concerned me is that when we built the rec center, we built the parking for the rec center. There's no more parking. I mean, if you had a multiple, depending on what you had there, and I mean, that's one of the biggest issues. I know we've talked about other parking, other places in downtown, but that wouldn't be big enough either. I'm sitting here reading, looking at site constraints, thinking what goes there and how much. That's one of the biggest concerns I have.
Sure. And one of my understandings, and John can correct me if this is wrong, was that when the parking was designed for the rec center, it was calculated in to be shared with that pad. Is that relatively correct?
There was some acknowledgement that there would need to be some parking shared without fully knowing what all the uses would be.
But I hate to say shot that down, but shot that down because someone who has coached and with my son playing ball would go to the gyms and count the cars in the parking lot at one gym, and you have turnover. But if you had 3 games going on, we don't have enough parking spaces now. If you had 3 games going on and had 3 more coming in, there's not enough parking spaces actually that was built in the parking lot to handle all that. That may not be an occurrence that happens every day, but there was an issue that I said if you had big tournaments, so that's what that's what a new gym may have. There are going to be parking issues. Sure. Period.
And we're actually having parking issues now, and I mean, believe it or not, as the buildings are getting fuller. So one of the things that we think that having someone come in and give guidance is that some of the nuances that DFI's had experiences with in other places, it may not be a parking deck like Wilmington, but it might be creative ways that the building has to include either parking in it, under it, or accommodations for parking in other areas. That gets into a public-private opportunity potentially for us to get some of the other parking we've identified space for to be built with us or for us. And so that's a great example of some of the creative type guidance that we are looking for DFI to help us figure out so that we don't miss any. The parking one's fairly obvious. there's probably a dozen other parking light gotchas that we're concerned that we would miss because we don't do development every day. And so that's a great example of the type of things we're hoping to get help with.
I saw on your map, Blowing Rock, you didn't have Blowing Rock with their parking next, did you? I mean, I saw, Blowing Rock, you didn't have them with their parking decks. And if you can build 2 parking decks and that's the way that town is, that was pretty creative.
Great. No, I mean, to your point, it is a very good question. It's actually one that we spent some time talking to John and Mari about in a call a couple weeks ago, because it inevitably comes down to parking. Any downtown urban development on a small pad is going to come down to parking. And as part of our analysis, our site analysis, we're not just looking at just that pad, we're looking at it in context to the entire downtown study area. So we're going to identify what's going on at the rec center. We have eager grad students working with us this summer that are itching for the opportunity to go count cars on a
They've got experience.
That's really what we do. We get down to the granular level to figure out just what the demand is. We figured out what sort of shared component will work, right? If you've got a restaurant on the ground floor of the new development, that's probably going to be more of a 5 to 9 type of use, where at the rec center, the primary time that's being used is probably more 9 to 5. But we'll figure out what that overflow is after 5, and so we start to figure out what sort of shared component can be applied to the existing parking, but also identify what demand there is for new parking. And we're not just looking at that site. We'll try to identify other opportunities for parking around the site that can be used. As for office users these days are used to walking 2, 3, even 4 blocks sometimes for parking. I'm not saying that's going to happen, but we take it all into account. But it's a very good question.
Okay.
So I wouldn't want to expand it beyond where you are or where you plan to go, but would this incorporate any projections as it relates to a future commuter rail station in the area? It wouldn't be right there where you're talking about the pad.
We had not planned to ask DFI to make any projections about the rail station, but would share with them the most recent information we have about the possible location of one, because once that project does move forward, the walk distance from the station to an office building, a quarter of a mile makes a difference in how effective that parking can be. So I think we would indirectly use that, and part of the analysis that we asked them to do is factor in, should the station be located at spot 2 instead of spot 1, it may make a difference in some of the parking calculations or even the potential uses. So I think we could go further if they said knowing more needed to, but at this point, the transit plan is not ready to identify specific station sites. So we would have to work with the sites that we've identified as likely would be about the most we could do for this study.
And we would work that into our analysis as well from a standpoint of, we think it actually adds great demand for that pad, right? When you talk about potential office users or residential, and to be within a quarter of a mile. So it's something we will definitely want to let the development community know about, and we can make some preliminary assumptions about what we think.
Okay.
Curious pen over there.
I'm not sure that tonight will be the final time we'll need to talk. I think this is new to us. It's new to me. So let's start by Marcia, you and Roy telling us what your professional background is and what made you migrate to DFI, and what's your passion?
Go
Oh, I
ahead.
love that. I'll start.
We don't get that question off?
Yeah, we don't. That's a great question. Let's see. I guess where I got interested in real estate development, or really community development, is my early career post-college was working in public health, so helping people make healthier choices about their home environments. through that work, I realized that there was a greater system that really influenced the type of lives that people were able to have, right? You can't make a healthy choice if there aren't sidewalks or good street lights or amenities for you to be able to live a healthy life. So with that, I kind of started going up the food chain in terms of who are the deciders, who gets to shape built environments. So I became interested in local governments, for one, knowing that they were really a key factor and through their public investments, through their policies in deciding what a community looked like. And then that also finally led me to real estate development, because I realized, well, that is a really big fish on the food chain that also is driving how communities grow and what people's lives are like. So that is how I got into real estate development. I went to graduate school at UNC and I studied public health and city and regional planning. While I was there, I found the School of Government, which was really exciting to me because although I really enjoyed my graduate education, I felt like it was a little bit too academic, too ivory tower. And then I got to School of Government and said, oh my gosh, these are all the people doing work in the real world. So that was really where I found my home. And that was in 2011 that as a graduate student, I started working at the Development Finance Initiative as their first graduate fellow. When I graduated a year later, they said, would you like to work here? And I said, absolutely. So I've been part of DFI helping to build it since the beginning. And Rory was there with me at the beginning as well.
Yeah, on my end, born and raised in Atlanta, Georgia, where they've done a lot of things wrong as far as urban development, and I've never desired to move back once I left for college. Spent some time living abroad, which is where my passion for city planning and urban development really came to fruition, seeing how they did things a little bit better over there. Was with Marcia in grad school at UNC, did a dual master's in business and city planning. And when I started my grad programs, I heard about DFI and the work they were doing with the School of Government. Actually jumped on board as a grad student fellow working with Marcia back in 2012. When I graduated, they had just started building out their project management team. I also started my own real estate company called First and Main Development. So one unique aspect of DFI is that some of our product managers, some of our staff actually have outside real estate companies as well. And so I spend about half my time advising DFI project managers and half my time doing private real estate development outside. So it's beneficial that it helps us keep our one foot in the private sector, one foot in the public sector, so that we really know what's going on out there with these projects, development assumptions. So it's
Still in the real estate business?
I am. Yep.
When Maury was making the introductions and was talking about the background and what led up to this, I'll let all three of you comment on this, but Maury made a comment about there's no really adequate space for a full-size restaurant downtown. Is that just a statement, or is that a vision, Maury?
I would say that's more than just a statement. For example, having Josh Whitaker come through and having to seek exceptions and things like that in order to open his restaurant, showed how you have to be creative using existing building stock to put anything resembling a restaurant in our existing historic district. The spaces are small. They've never been restaurants really. They're not really equipped for it. I can't, short of any sort of new building, I couldn't honestly tell you any place in our downtown district that would be large enough for a sports bar or a family-friendly pizzeria or someplace like that without it being either cramped or not being able to even be there because of, regulations with the health department and things like that.
Well, I'd say that in most any venture like this is that first part is the visioning, and that's what we've been trying to do for years, literally decades, since I suppose Rex Todd tried to cast a vision years and years ago. But now that we are going to have the rec center, do y'all Marcia and Rory, do you see that as a real driver, or is that based on your experience, that what we should be striking out and thinking that's going to be the driver, or should we be a lot broader based than that?
You know, to be honest, I'd have to know a little bit more about the uses of the rec center to make that determination. But I mean, I can say, you know, this is a broader example, if you look at the downtown YMCA in Durham, where our office is based, I mean, I think that has been a tremendous asset for surrounding restaurants.
For American Tobacco Campus
American
as well.
Tobacco Campus as well. They've got a Y station there. So I'd say yes, but I'd say there are other general trends that are probably driving the demand for additional restaurants downtown as well.
From y'all's perspective, are you wide open as to what might be there?
Absolutely. No, we're not. I mean, that was the first time that tonight I'd heard that there was a vision for a restaurant. So I mean, we're starting with a clean slate. Well, obviously, if you all say public interest number one, restaurant, then that's what we're going to work with. But you know, we all are the boss.
We try to take that vision and what your desires are, but embed it in a market reality and work with you to kind of do that education to understand what is possible given the market, given the financial constraints. We're not here to be Pollyannish or not naive. We want to give you hard information and hard answers when possible.
And our market analysis is going to show you specific data on whether we think the additional restaurant space can be supported.
Speaking of market analysis, we were talking about a couple of times, it was mentioned about refreshing that data. I hope you'll throw out the data.
We will start from scratch. Yep.
And because it's what Garner is today versus and what we were thinking about, what was on the ground is so different than it was 10 years ago, 12 years ago.
And we talked to John and Moore about this. I mean, we probably will not, we'll look at it just because it's there, but we probably will not, we have very different methodologies, and we will not reference it because it's 11 years old at this point.
I'll also tell you that 05, 6, 7, and leading into 08, we had the idea that we could, that is, the council could legislate the price of a house in Garner. We were going to grow ourselves for various reasons. We were not going to have the low end pricing of housing in Wake County. We made a giant mistake, and it took us several years to figure that out before we changed strategies. And the market is going to decide. We can't sit here and say what's going to be built. I think I'm thinking the market is the market's the driver. Otherwise, we're going to sit by on the side of the road and watch the parade go by. But I'm glad you're starting from scratch on that. You mentioned the idea of a third-party architect. What role do they play? Is that part of your proposal? Or is that something that we're paying for, somebody else is paying for? When do they get involved?
So that is not part of our flat fee. So they did get involved with that. It's number 5, the site constraints analysis, where we'll bring on a third-party architect to help with that.
That's an add-on to the contract?
It is. You'll hire that architect directly. So that architect will work for you all, but we'll work alongside them to help fulfill those goals.
You know, if we're talking about just the pad alone, it's a pretty front-end simplistic exercise. Essentially, it's just a massing study to give us an idea of, based on the site constraints, what that site can hold from what we believe the demand is. So we're not talking about architectural renderings. We're talking about massing renderings, but it's not. They don't get into the architectural design specifics at all.
What percentage of your work would you say is relative to the market analysis?
Oof, that's hard to say. It's very iterative in that we're constantly going back and we're looking at things from different angles. But the market analysis is the bulk of our work. I guess.
Yeah, I'd say call it 30%.
I was going to say 32. Okay.
That's encouraging.
You know, site analysis, call it 15%. Public participation, call it, but
Well,
depends on how
anywhere
the
from
direction.
5
anywhere
to-
from 5
yep.
to 25, and
Yep.
then financial feasibility.
You know, most of the folks that would be interested are folks that you'd never see until late in the game.
Oh, yes.
They're not going to play their hand.
Definitely not.
So how do you get to those folks that are off-site that you won't ever see, and you don't expect to come to a public meeting?
Right.
How do you capture their attention?
Yeah. We have to be very creative and find different ways. So we have learned and know that you can't just hold a town hall meeting and expect people to show up. You might, at the end of the stage, you'll find all kinds of people coming out of the woodwork that have opinions that weren't engaged earlier. So we try and do a mix of different techniques. So we do, we talk to you all, we talk to people that are leaders or self-appointed leaders in the community to figure out who are the key stakeholders, who are the gatekeepers, who are the people that you need to talk to and involve early on. So we do a lot of one-on-one, small group meetings. Sometimes we'll do door-to-door, we'll talk to people in downtown. So we'll use our own methodology, but we'll also work with you all to try and figure out who are the people to talk to. But it does involve a lot of one-on-one conversation, small group conversation.
I just wanted to add one thing to that. So obviously we've known this is coming and we've been working on it for the last couple of years. And so we are aware both of people that are interested in development around the pad and some that are becoming interested in development of the pad on a local level. So one of the things that we talked about with DFI was how we can ensure that our local developers can be included in the process, so it doesn't feel like, we're just going out to the larger triangle developers. And they've assured us that we'll be able to give them some guidance as to who we already know would be interested at the local level. So that will probably help bring some of that in before the very end. But at the same time, the great thing about that is it gives us some cover. So we're not, if we were to do this ourselves and the only response we got was from a local developer, it gives us a little bit more, it gives us that third-party distance a little bit, so that even if we do decide to go with a local developer, we know that they've been vetted, through a very rigorous development process that DFI has run. So it's not just the town saying, we're interested in you specifically developing this. It's your proposal is the highest and best use of this property, and that is why we have selected you.
And that formal solicitation comes on the back end, right? You look at the timeline, but we're really starting to think about developers from day one as well. Again, we've got a pretty extensive Rolodex already, but a lot of times they will come to us throughout the process to ask questions, and we're already from the get-go thinking about.
I think, Maury, you or John, one of you mentioned that this market analysis paid for it, public dollars, everybody has access to it. It'll be useful for some period of time. DFI is competing against the private sector. What kind of pushback do you get from folks about you being a government agency and in private sector business?
So that's actually part of our DFI's mission, is that we do not compete with the private sector. When you say, are you referring to me doing outside development work?
Or just this type of service? Yeah, we actually don't see ourselves as competing with the private sector. We think we offer something pretty distinct because we're embedded within the School of Government, that it's a very unique approach. We're working for you as a local government when we're on your side of the table. We don't really see it as competition. I'll say the way that we solicit business too is really requests come to us. So if you were to put out a request for technical assistance for this type of service, we wouldn't respond to it. It is leads like Mari, someone who comes to our course and learns that we exist. That's the type of requests that we take. So anything you'd add?
I mean, there are other firms that are doing similar work to the work we're doing, but we do it a different way. We're not just handing you a book at the end of the day saying, here's a plan, good luck, but we're actually going out and trying to find that development partner and working with you every step of the way.
Oh, look, y'all have been to work sessions before. This is the first time that our work session's been televised, and the information that's presented tonight, two prime examples of why we wanted it televised, to let people hear what goes on, that some of the nuts and bolts, so that when things begin to happen, they have some, or it creates some interest.
Fantastic.
Having said that, let me ask you for the both of you. I've been in the consulting business and I've been to many a presentation to influence the decision. Will we see you again, or do you hand it off to somebody? Are you going to do the work, or is it somebody else doing the work, or Ms. Francine going to be doing the work?
You're stuck with us. We're a pretty small team. I think, are we eight people now?
8 full-time.
8 full-time with a few graduate fellows. a lot of us has been there since the beginning, like Rory and I, so no, we're very hands-on. You'll see quite a bit of us.
Yep.
We will expand the team. There'll be graduate fellows and a project manager who will be assigned, and Rory and I would serve as kind of a senior project management leadership role, but we're here at all the key presentations and decision points and advising all along the way. We're too controlling to not be there all the way, so yes, you'll see a lot.
One of the things it sounded like is this is the front end cost. The town's going to has to absorb a lot of other costs down the road. Like that, if get the right developer in here, then that developer's going to say, well, I'd like to be here, and you all got to see what the potential is, so you need to ante up some more dollars to make my pro forma work. John, is that a likely scenario?
I think that in general terms, that's a likely scenario of what DFI experiences. I think what we're trying to do is work with them to make sure that all of the many investments that council has already authorized being made are well tallied and put up front as an upfront offering. So I can't speak to all the projects they've been involved in, but I think one thing that would be different than that reactive nature they mentioned we would be showing the development community how much the investment has already been. And I think we could limit any future development or any future investment that we would be willing to. I don't know exactly how that would look in the development process, but I think that any restrictions or constraints we'd want to put on that could be enumerated when we put out the request for proposals, so that people know the kinds of things that we would consider participating in, and we can draw a line at the kinds of things that we would not. Because there's a lot of infrastructure investment that the council and the taxpayers have already made that we think is one of the reasons we can get a very successful project there, and we need to make sure that we're bringing all those forward and in the way that we present this out for the development community.
From Marcy and Rory, at an elementary level, if Maury and John hadn't brought this forward, we'd put out an RFP as best as we could, and we would invite people to come to the fight. Like the top 2 or 3, what sounded like the best proposals, and based on our elementary understanding of the process, we would let them compete against each other without us investing this initial $76,000. So tell us, you've been patient, let me ask you the question, so wrap it up by saying, well, where are we going to see the return on the investment? And I think we need to be able to, when the public knows we're going to invest the dollars, how do we get it back? So if you've been there, you've done it, you can give us a better idea than anybody could.
It's a great question and an excellent hypothetical scenario that unfortunately is all too true, actually. It's one that we see a lot. Frequently, we do get involved in pre-development when a community has put out an RFP, and either they get no development response because there's too much uncertainty, there's not enough clarity on what exactly the town expects, what it would like to see, so it's too risky for a developer to come to the table. Even in places where you'd think there'd be developer interest, they'll hear crickets when they put out an RFP that doesn't have enough specificity and when it's not rooted in market reality. And or because there hasn't been public engagement or a lot of public interest identified, that's another risk for a developer, that they don't know if they get to the end of the entitlement process, it won't be approved because there hasn't been an identification of public interest. That was the case in Wilmington frequently. You might imagine there's plenty of market interest in Wilmington, but those public interests were really tricky. If you were to get responses to the RFP, I think a challenge that you would face would be that they would be wildly different because you didn't put out those parameters of what you wanted to see on the site and it wasn't rooted in your market and financial realities. It would be really hard to compare those proposals. And if you were to select a developer out of those 3 that you named, you could be in for a lot of surprises later down the line, as you say, where it might not be clear what the public-private partnership strategy is or what it would take for the private side to be successful, so you might get requests down the line. So we think our process is helpful in that it is some upfront investment, but it helps to protect you with more certainty, but also making sure that there aren't hidden asks or hidden costs down the line from a development partner. Are there other things you'd add, Rory?
Could I add
I
something?
think, I've heard you say, give me a second. I've heard you say these two words at least 3 times tonight, market reality.
Yes.
And that's key. And that sounds like someone who's not going to blow smoke at us. You can say, market reality, you may think you want to have a restaurant or whatever there, but the market analysis is, no, that may not work there, but this may be a better alternative. Market reality, 2 good words.
If I can share an anecdote. So the training that I originally attended where I found out about DFI, they came in, they shared, I think, 3 proposals that were essentially RFPs that communities had put out. And, looking at the first two, I'm like, oh, these look great. They have a lot of information. They explain what's going on there. And the first thing, I'm not sure if it was you or Tyler Mulligan, but basically the presenter said, these are terrible. Like, these provide nothing the developer needs to know in order to respond adequately to an RFP. You're going to get less response than you would if you had all the information. But you see those so often because obviously there are limitations on staff as to, how much I'm able to do and market updating, site analysis, all those things are not my wheelhouse. And is one thing I also wanted to add about what's the return on investment, so again, I would say it's not just what we end up with on the pad, it's also the additional development that we'll see in the long run because we have adequate data. I like to think of the pre-development services as essentially sort of being an incentive, another investment, as John said, that we can tally and show to the development community and say, look, this is the riskiest part of you deciding to come build something in downtown. We've hired people, we've done the work, we trust it, we know that they are experts in this field, you can trust it, and so that gives them a significantly better foundation to work off of than, me and a group of volunteers who have, really great, have put a lot of work into it, but just don't have this level of expertise. The difference between what the DFI data and, the DGA data, if we were to do it in-house, might garner.
Good.
Last comment, would you all, and not, I don't need to know any of the numbers, and I'm not sure that they would have an impact on what we do, but would you, DFI, would you, based on your experience, outline some of the types of things that the town is likely to have to invest in addition to your initial cost, and just pass that along to Mari and John?
Surely, in terms of the third-party architect and things of that nature.
What other kind of things that you see that, so that we just, one of the problems that we face is we got enough surprises. You were sitting here, we estimated one that, we extracted from the air the $750,000 number, and now we just add a 0 to it. And then we can get what we were really anticipating. So, but you could have, it would be helpful, it's not a deal breaker by any means, but if it'd be helpful just to give us an idea so that shows us what you're talking about, and we don't get it cross paths later on. Thank you all for being patient and responding to the questions. This is a very interesting undertaking and interesting concept. And
I wanted to just ask 2 quick, sort of, I guess you'd call them ancillary questions. Number one, would you draw into the mix at all the town's economic development director and some of the visions he has or work that he does, number one? And number two was, I guess, a question for Mari. Mari, I guess if we did this, you would be the point person. Is it the DGA, am I saying that correctly?
Yes.
They would still be just a sort of an oversight committee, or would they have much involvement?
I would say they'd probably act more like a steering committee for it. And one of the things I've been thinking as we talked about it is essentially the role that they've been playing thus far has been giving public input, right? So yes, we will find out if what we've thought about putting there is actually going to work in reality. But it's been based on, us looking at what do people say they want in downtown, what do we see working in other places. So that's sort of your initial public engagement to build off of. We have folks on that committee that are in real estate, engineering, commercial leasing, kind of a really broad gamut of, banking, things like that. So I think that they are going to bring some really great perspective as sort of the steering committee. And Joe actually sits on that committee as well. So he's been involved in all the meetings that we've had where we've talked about the DFI proposal, and he brings great knowledge and input to those meetings as well. So, and obviously we expect that he'll work on it with me as staff. But yeah, that's our goal, would be for that downtown development team that's already put so much work into it, to continue kind of steering it as the public engagement side and giving feedback to the work that DFI is doing.
Good. You confirmed what I thought would be the case.
I knew I had one thing that Marcia, you mentioned about skin in the game. So what is DFI's skin in the game?
We don't charge enough for our services. The flat fee that we charge is pretty low and pretty competitive. It really just covers our costs, essentially, to keep the roof over our head. So I say skin in the game in that because we are taking a portion of the developer fee and we're trying to help you bring a developer to the table, we're incentivized to help reach the end, right? We don't just want to hand you a report or a plan that collects dust on the shelf. I know that that's a cheesy metaphor everyone uses, but it's a true one. We want to give you an actionable plan to bring someone to the table.
We're only successful if you all are successful in bringing in the right developer.
Right. And that fee is a one-time thing, right? If we've been in some projects where we've been working for years, and because of political market realities, shifting public interest, all kinds of reasons, y'all know local government is not boring, we've been alongside them longer than we anticipated, but that's okay. We're there with you to the end.
When you get too far into this game, you'll be working with an entirely different council, and there'll be changeover. So apt and
Yep, we're used to that.
We are.
So we want to thank our guests for being here. Also want to thank a number of our DGA board members are back here tonight, so we want to thank them for the work they've put into this for the last couple of years. Staff is prepared to take any additional input. You've already given us input tonight. We heard that we'll get some additional information that we'll be back to council, and we'll take your direction on an appropriate time to bring this back to you. One of the things I did want to point out, since people are hearing about this tonight, is that the staff would propose a funding source for this engagement would be the redevelopment bonds that were part of the 2013 bond referendum. We have gotten that approved with bond counsel, that the engagement of these services is an allowable expenditure of those bond funds, and since some of those bond funds were used to purchase land that they'll be helping analyze, we feel like it brings the use of that investment back full circle. So we are proposing, or at least wanting to acknowledge that that is an acceptable funding source should council choose to direct us to use that funding source for this engagement.
Very good.
And we'll bring this back to a future, probably one of the June agendas if that's agreeable with council. The DFI folks know that we would like to work quickly on this. They do feel like they have some resources that they can start applying to our project as early as July, making sure I'm not misspeaking there. So we're not rushing you to make a decision. We just wanted to point out that at a previous time, we were asked how quickly could we get this work done and get this site development started. And we just wanted to acknowledge that we've got a timeline that we could start pretty immediately if we are given the authorization to move forward.
But, and their proposal says that the fee can be paid over 2 fiscal years. So you're proposing we're going to pay one before June 30th and then one next year, or because it's redevelopment bond money, you can just pay it at one time?
If we use redevelopment bond money, it would not matter which. We would not have to take the offer to stretch it over 2 fiscal years. If there was a choice made to fund it in some other way, then which years we would span that over would be dependent on the funding source identified, but we think the bond funds is the best source for that.
All right.
Okay.
What part of the bond?
The redevelopment bond, there was a $2 million redevelopment question. So the fourth question, the smallest question, was the redevelopment bond question. It was $2 million, and it was for land acquisition and infrastructure, which included stormwater for the recreation center site. And so most of those bond dollars have been expended for the rec center BMP, and also much of the land acquisition that we've done in furtherance of the downtown plan, but there would be enough funding left in that bond to cover this engagement.
Look forward to hearing back from you.
Thank you.
Thank you for your time, everybody.
Next is the manager's report.
Mr. Mayor, what I have is, just want to inform you about the volunteer reception that's going to be held Thursday, June the 6th, from 4 to 6, and you'll probably hear about this again next week, but just wanted you to be able to get it on your calendar. I believe that's going to be at the Senior Center. Is it at the Senior Center or the GPAC?
That's just
Yeah.
the email that I
Okay.
received, so
Well, I
we'll
don't have the
check.
information about the location, but we'll get that to you, but just wanted to allow you to get it on your calendar if you're interested in going to that from 4 to 6 on June the 6th. And then the other thing I have for you is that I plan to submit, or someone from staff will submit some scenarios for the budget discussion we had about a week ago to you by the end of the day tomorrow. Things for you to look over.
Garner.
Yes. Allison, if you would stand, please, and pronounce your last name. Mahud. Allison Mahud. Alice. Oh, okay, I'm sorry. Alice Mahud. An intern from UNC School of Government, and she's joining us for the summer and is going to be working on some projects with the budget manager and just freeing up some of his time and allow us to do some things as far as, getting prepared for the next bond and those type of things. But since you're there, if you have anything you want
Just
to
really
say or
happy to
add?
be here. My career goals are to be a town manager in a town about the size of Garner eventually. So this is good experience, and thank you for having me.
Glad to have you. Anything else, Ron?
That's it. That's it. Yeah.
I just want to thank the staff for the Memorial Day event yesterday. Well attended. A lot of folks there on a hot day. I appreciate the work. I think Katie does that. She's in charge of that and does a very good job. And all the other folks with Public Works getting it set up. And Rick was there also. Rick's right now, they're watching us now, but thank you, Rick, for filming it. Anyway, it's always a nice event to recognize those who have served and those who have given their lives for our country. So it's a really nice event and well supported by the community.
Yes, and Eric Shepard gave an excellent address.
Right, super.
Love to see more of him.
He could get you motivated to run through the wall, I think, if you let him.
He looks like he could.
He looks like he could run through the wall.
Mr. Mayor, the main thing I want to mention, the Human Resources Committee will meet on this Wednesday at 2 o'clock. And the main purpose of that is to discuss some logistics and sort of orient Mr. Vance to the process. And we'll begin looking at the need to interview applicants for several of our advisory boards. So that'll be posted as a public meeting, I believe. And I would just echo what my fellow council members said about the Memorial Day celebration yesterday. It was well done. Glad to attend it. I think that's all I have.
For 2 days, I've watched TV that Joe Stallings is on there. Is it a podcast? What do you call that? Who are you doing it for? What's the benefit? You done a damn good job, I tell you that.
If I heard you correctly, the Economic Development Department, as a part of Small Business Economic Development Week, produced 2 podcasts, one on workforce in our community, and the other one was on entrepreneurship. So they're on YouTube. Rick and Adam Carroll, they can have most of the credit. I was just a talking piece. They made everything happen. So I'm glad I know somebody's watching it. So thank you, Mayor.
I watched part of the entrepreneurship the other night. It was on. I stopped and watched it. Sure did.
Thank you, Councilman. I appreciate it.
One of them that was, I don't know how many, you said there was 2 of them. The one I picked up, a part of it was filmed at White Deer Park Nature Center.
That's correct. Yes, sir.
Who was the lady that was the primary? There was one that was sitting to your right.
That would
probably, if I'm remembering correctly, that's Kimberly Wheeler with the Capital Area Workforce Development Board.
And who were the other participants? I forgot.
Bernita Nichols is, she heads up the customized training for Wake Tech. And then Lisa Dolphinbaugh is our local career development coordinator at Garner Magnet High School. So all three of those ladies are an integral part of our BRE teams, our business retention and expansion teams, and often lend their expertise in helping us meet employment, meeting the demands for employment, but also helping with things like customized training and employment issues that our companies face here in our town.
Good.
Yes, sir.
Good job, Joe.
Thank you, sir.
Thank you, Joe.
Harold, do you need anything?
Yeah. On behalf of the Ms. Garner Scholarship Organization, we'd just like to thank the council for their support, particularly the support of what we have coming up as a celebration and additional funding. Carly Sandiford came for you in February, and she actually won Miss North Carolina's Outstanding Teen in April. So we're preparing in July the 7th to send her to Miss America, which will be in Florida, in Orlando in July. We've actually, Garner's been represented at Miss American Atlantic City for 4 times. We've been represented in Las Vegas 1 time, actually 3, because we were the only organization in town that had 3 former Garner girls at Miss Pennsylvania and Miss Virginia, and Miss New Hampshire and Miss Garner all at the same time in Las Vegas. It was a big deal on that out there. But we wanted to do something really special for the send-off of Carly. Being this the first time we've had a outstanding team to win Miss North Carolina. The closest we've ever come was second runner-up and several runner-ups. But instead, we just wanted to say to the people across the state, we want to put on a class action send-off for this girl and to do what Garner does best, and that is, represent, the Garner in other areas. And so we're going to go that. I want something other than peanuts and potato chips, and we've got that prepared. So July the 7th at the ballroom, Marquee Ballroom, will be the send-off. It'll be from 3 to 5. You will be getting an invitation to everybody there. So, but we really appreciate the additional funding that y'all provided. It really means a lot. So, any questions? I'll be glad to answer that.
I don't think it's happened yet.
Yeah. We have the actual council vote on that, decision on that is going to be at the next meeting on Monday night, and it through our mid-year funding request in the council, that would be presented to the council for their action.
But you clarified one thing, Harold, because we were thinking it was sending someone to the Miss North Carolina pageant, which is something it happens every year. And so this is now, it's the Miss Teen going to the national. So you've helped clarify what the dollars are for, and your wait was worthwhile.
Yeah, I would say we have a mid-year funding application, so if you submitted that to our budget manager.
I've already done all that. That's already been taken care of. I got that to Mike last Friday, so I filled that out and got it all there.
Okay,
so,
all right.
Council have to take formal action, right? Will the council have to take formal action?
Yes. Yeah. Yes.
Next meeting?
Yes.
And anything else I need to do, I'll be glad to take
My car
care
needs
of.
washing.
But that's basically, with what it's about, what it's for. Is to do the big send-off for.
You plan to join us again on Monday night, in case there's any questions? Were you going to come to the meeting on Monday night, in case there were any other questions by any other council members, or?
Next, did they come back?
Yeah.
I'm hard of hearing.
Oh, I'm sorry. This item was actually slated to be on our Monday night meeting.
Okay.
So I was just wondering, just letting you know if you were coming back.
Yeah, I understand.
When it's presented.
Getting support.
Okay.
Officers, so,
Is this going to be a consent agenda item? I mean, why would it not be if it's the policy
Yeah, I don't know.
there? Well, shouldn't it just be a consent agenda item? Should be that discussion?
That'd be fine.
Consent agenda, move on.
My hope is we'll win Miss America's Outstanding Teen, and I'm gonna retire.
Consent agenda's what.
Consent agenda, move on.
We don't consent agenda?
You're ahead. You're ahead. Hold
Okay,
right there.
anything else?
It's going to be on the consent agenda. That you couldn't ask for any more than that.
All right, y'all ready to go? Need a
If I need to
motion?
do anything else, just let me know, and I'll be glad to roll
All
it.
right.
Let's just sit down.
You're done.
Take care, bye.
Move to adjourn.
Motion to
I'll
adjourn.
get her back in 4 years.
Is there a second?
Second.
Second.
Further discussion, all in favor, vote by saying aye.
Aye.
All opposed?